All right, let's get set up, y'all. Welcome to Money Monday. Can you believe it? It's Monday again. I told y'all, Monday is the only day that it seems like just flies around. Like, Friday doesn't fly this fast. Saturday doesn't fly this fast. But here, again, it's Monday. Welcome. Today we will be talking about all of your questions. So I've gotten a lot of financial questions. So I'm thinking this is probably going to be geared towards all things financial. But if you have anything estate planning, let me know. Send it in the chat, send it in a DM, send it in a caption or a post somewhere, wherever you want, put it there. But welcome to Money Mondays. I guess I'll introduce myself. I'm Jayla. I'm your wealth best friend. I call myself that because I feel like a lot of people need accountability. They need somebody that they can trust to be in their corner to talk about money. And a lot of us don't have that. So here I am. I come on Mondays, allow you to ask questions, and I am, to give you background on me, I'm a licensed attorney. I specialize in estate planning, which is planning for your money after you're not here or when you can't make decisions. But I'm also a certified trust and financial advisor, which means I can help you plan for your money while you're alive and well and trying to meet your goals. I specialize in helping my clients with their reach their goals when it comes to investing and retirement. And I do this with education and accountability, because I found that most people, if they understood their portfolio, if they understood what they're investing in and the fees, they can go at it on their own, save a lot more money, and, end up where they want to be. So, welcome to Money Mondays. If you're new, I'm so happy to have you. And feel free to ask any questions that you have. I'm going to get this started, so let me take that off. Hi. And the first question that I got, somebody DM'd me. They wanted to know, what do I think about target date funds or life cycle funds? Sometimes they're called that. A lot of the financial industry is terminology to make it seem more complex than it is. So I used to post, and you can go back through my page, some of the key terms that you needed to know so that you don't feel so overwhelmed. But essentially, life cycle funds or target date funds are investments for retirement. You'll normally see a year. And what that year is, it's the year that you plan to retire. So if you plan to retire in 2060, then a lot of the times they're going to push you into that fund. And what it's supposed to do is, if it's 2020 and you're not retiring until 2060, 40 years, that's such a long time. Then it's supposed to be super aggressive because you have a long time to invest. And then as you get closer to the retirement age, it backs off of the aggressive investments and kind of switches to a bond portfolio, which is really conservative, so that you make sure that you have your money at retirement. Now, sadly, I haven't been seeing, I've tried a life cycle fund, a target date fund before, and I just wasn't seeing my money grow as much as when I just put it in an index fund and allowed it to track the market. So my personal thoughts for my money, when I had it in there, I was like, I can do better and just learn what I need to know and switch my portfolio when the time comes to kind of trail off the aggressive investments when I'm closer to retirement. So yeah, that's my opinion on target date funds. But learn a lot about them because you will see them in a lot of your 401ks. And I just want you to be aware of what they are. I actually have a question for you guys, something that I want you to ponder, mostly because I was listening to Beyonce's Beyonce, because it's been 7 years since that dropped. what is your aspiration in life? Now, hers in Pretty Hurts, she said, my aspiration in life is to be happy. I know, I'll tell you mine. Mine is to be able to say that I was here, which means to me that I made an impact, that I made a difference while I was here. So part of Money Monday is helping me carry out that legacy. If one person learns something, then that helps me feel like I was here for a reason, I was here for a purpose. But really, kind of think of what your aspiration in life is, because it matters. It helps guide your life and make these decisions and your goals. So ponder on that. If you want to tell me what your aspiration is, then feel free, drop it in the chat. I would love to hear about it because I'm always so inspired. I also got a lot of questions about the pop quizzes that I posted. I think that was last week and this week. I had y'all looking at investments on a Saturday. Don't you love it? And a follow-on conversation and question that I got from that was, there are so many funds out there. How do you know who you can trust? You know who you can trust? Yourself, to do the research, to find out about the funds that you're considering putting your money into. Research is your first line of defense, because you truly understand, okay, if I put my money into this, historically it's been returning 6%. Wait, where's the benchmark? How is the stock market on average comparing to this fund? Oh, it's underperforming because the stock market's been returning 10% or it's been returning 8%. Okay, so maybe that's not the fund I want to put my money in. I already know how I feel about this bank, and they're the ones that created the fund. Maybe I don't want to put my money in with this bank. Maybe there's another fund that I can find through a bank or a brokerage house that I trust, and I can put my money in there. So you are who you can trust, and you have to review these investments, no matter what it is. If it's the stock market, if it's crypto, if it's art, if it's anything, Pokemon cards, no matter what you invest in, you have to do your research. You have to know what you're investing in and be comfortable with that. Let me see. I think we got a question in the live. So where do we get started when it comes to investing? It depends on what you're investing in. Like I was saying, you're not bound to invest in what society says is going to be profitable, the houses, the stock market. There are so many options available to you. So the first thing to figure out, what do I want to invest my money in? I'm kind of into non-traditional stuff right now. I mean, I feel like I put my money in the real estate. I put my money in the stock market. I put my money in crypto, and I'm buy hold. So it's like, you put it in, okay, we're here. We did the research. We're not selling. So it's not exciting. It's not something that I really have to watch closely, like day trading. Oh, my heart drops this. No, it's calm. I've invested in art. I've invested in my business. I've invested in other businesses. So now I'm investing in non-traditional stuff, like shares of art, shares of like Yeezys, shares of a LeBron James rookie card. So there are non-traditional ways to invest. It just depends on what you want to invest in and what type of investor are you going to be. That's something that you have to decide. Are you going to be the buy holder like me, where it's you put it in and you expect and are okay if you lose all your money, and you're okay if it skyrockets, and 10 years from now it looks a lot different from the money that you initially put in? Or do you want to be the day trader where you're trying to make a quick buck real quick and having to deal with the roller coaster ride of emotions that is. And then you have to understand taxes, because the minute you buy and sell something, Uncle Sam's gonna be like, I don't care what you did. You made $1. I want some of that. I want a piece. So really sit down and figure out you and your goals. Wow, welcome everybody. We were kind of talking about where to get started when it comes to investing, and short answer is you got to figure out what you want to invest in. You have to figure out what type of investor you want to be. I always recommend that you figure out when you want to retire, and that should be a focus for investing, because if you want to retire at 40s, you're going to need to get started a lot sooner and make sure that your portfolio is getting the return to help you make it to your target number, versus if you're going to wait till you're 65 or 70 to retire, you can put in a little less and don't have to be as aggressive, and the market doesn't have to return as much. But that's a form of investing, and knowing what your account is doing, very important. So I hope that answers your question. Thank you. Oh, we got somebody answering the aspiration in life to live up to my full potential that God defines for me. We are one and the same. I told y'all give me so much inspiration, because that was me. I felt like I was not living up to my potential. I felt like I wasn't sharing my gifts. And that's part of what Money Mondays are. Like, I have all this education, all this passion. How do I give it away? Because otherwise, I'm just going to keep getting certifications, degrees, and then do nothing with it. And that's not living up to my full potential. So I definitely hope that you are finding what you are passionate about so that you can continue to live to your full potential. And I'm so proud, so proud. I love this community. So let me see if I had anything else. I think I covered all of the crucial Money Monday questions. For the pop quiz, I hope you guys got to see the stories that I did, because we had some questions, so I wanted to make sure that I gave an in-depth response. But just pay attention to what you're investing in. Pay attention to the fees, because I hope everybody understood that even though, especially with the last pop quiz, that fund returned 50% or year to date. If you would have put in your money in January, you would have 50% more than you put in. And that's what that was saying. But the thing to remember is that's not a traditional return. So as you can see, when I was doing maybe the retirement numbers and put in that your initial investment was like $1,500, and that you were going to continue to put $3,000 in a year, I only put a return of 8% or 6%, because the market doesn't normally return 50%. So we can't think that just because it did, it will continue to. Market goes up and down. So be prepared for a wild roller coaster ride of emotions when it comes to investing in the stock market. But if you invest like I do for the long term, you don't have that roller coaster ride of emotions, because time and compound interest, you've acquired more money than you put in. So you don't end up caring much that the stock market goes down 1%, or that it comes back up 10, or that it goes down 20, because you've made money. Best example, if you were to put $1,000 into Apple 20 years ago when it was $6.90, you would have $24,000 total. So do we care that the stock market went up or went down 20% when you initially only put in 1,000 and now you have 24,000, 23,000 more than you put in? We don't care. We just want to continue to see the dividends coming in and reinvesting, and you making more money as Apple does better as a company. That's it. Time is your best friend. Me, wealth best friend, time is your best friend. So please learn as much as you can about investing. It's intended to make your life easier because you end up saving less for your goals, needing to save less. Physically, you giving up money when the stock market or your other investments are returning more money for you. I'm always down with $1,000 becoming 24,000. Sign me up. As long as I know how much it's going to cost me, what's going on, what am I actually investing in? That's what's most important. You understanding what you're investing in. So, unless you guys have any more questions, and I do see one. Do I have a podcast? I don't. I promised myself I wasn't starting anything else by myself on my own. Hence the name of my company, On My Own Financial. So I've been doing other people's podcasts when they invite me, and I've had some wonderful podcasts. If you want to hear me, you should be able to hear me on a few next year, but my favorite one is the Food Heaven podcast. I was on their generational wealth episode. My heart, I love them. I appreciate them because it's actually about they're dietitians. They're registered dietitians. I was like, you really want to talk about money on the health podcast? They're like, yes. And I appreciate them because health is also wealth. I hope you guys are having a wonderful, healthy December. Staying safe because COVID's still out here. And I'm looking forward to you guys living up to your aspirations. And thank you guys for joining. I'm starting this 12:15 thing, and I think we're gonna stick with Money Mondays being at 12:15. So I'm so glad you guys are able to attend, and I will definitely see you next Monday. Come back if you have any questions. Like I tell everybody, I'm around on Mondays on Instagram answering questions. So drop them in the chat. Thanks. Have a good one.